HMRC's secret crackdown exposed. Cash withdrawals now tracked and flagged across the UK. What if I told you your own cash, the money you've already earned, saved, and withdrawn, could now raise red flags with the government? HMRC's latest move isn't just another tax update, it's a silent revolution in how your financial life is being watched. Every pound you pull from the bank could soon be analyzed, tracked, or questioned, even if you've done nothing wrong. This isn't fear-mongering. It's happening right now, quietly across the UK. Stay tuned, because what's unfolding could redefine financial privacy forever. Before you go, make sure to hit that subscribe button and turn on the notification bell, because on this channel, you'll always stay one step ahead. Here, you'll get the latest updates on HMRC news, UK benefits, tax changes, pension increases, cost of living payments, senior support programs, and government financial alerts. Everything that directly impacts you and your family. Don't miss the next important update. Subscribe now and stay informed every single week. Hey everyone, welcome back to the channel. Today we're diving into something incredibly serious, something that's quietly unfolding behind the scenes, but it has the potential to impact millions of people across the UK. If you've ever taken money out of your own bank account, if you've ever used cash for day-to-day expenses, or if you simply prefer using cash instead of digital payments, then what I'm about to tell you will affect you directly. Because HMRC, yes, the UK's powerful tax authority, has now officially begun what they're calling a new phase of cash monitoring, but what many people are describing as a hidden crackdown on ordinary citizens' cash withdrawals. This isn't a rumor. It's not speculation. It's part of a much bigger system quietly being implemented across the country. HMRC says this is all about tackling tax evasion, fraud, and so-called unexplained wealth. But in reality, this crackdown means your cash withdrawals, your spending habits, and your lifestyle patterns could soon be tracked, flagged, and even questioned if something doesn't seem to fit perfectly within the boxes of what the government system expects from you. Now let's pause right there. Because the idea that a government authority can monitor how much of your own money you choose to withdraw from your own account sounds like something out of a dystopian novel. But it's happening right now. Over the past few months, HMRC has been quietly working with major UK banks to tighten how financial data is shared. Under these new frameworks, any unusual or inconsistent financial activity can automatically trigger an alert. And cash withdrawals are now officially part of that list. So what exactly does that mean? Well, imagine you normally withdraw around 100 or 200 a week for small expenses, groceries, coffee, maybe cash gifts for your kids or parents. Totally normal. But let's say 1 month you withdraw a larger amount, maybe $1,000 or $2,000 because you're paying for a home repair or a wedding expense. Under the new monitoring system, that larger withdrawal might get flagged by your bank's internal algorithms, and that data can be shared directly with HMRC's analysis systems. Now, these systems don't think the way humans do. They're AI-driven. They don't understand context, emotion, or life situations. They only understand data patterns, what's normal and what's not normal. So if your withdrawal pattern suddenly changes, even for a perfectly innocent reason, it could be marked as potentially suspicious until proven otherwise. And that's when people start receiving what HMRC calls a nudge letter. A nudge letter sounds harmless, but in practice, it's quite intimidating. It's an official letter from HMRC asking you to explain where certain money came from, or why certain withdrawals were made. It's essentially saying, we noticed something that doesn't fit. Please justify it. And you only have a limited time to respond before they take further action. The scary part is that many of these letters are being sent to ordinary people. Not to tax evaders, not to fraudsters, but to regular citizens who happen to use cash more than average. And here's where things get even more interesting. The UK government's public message is that cash is still legal tender, that people have the right to use it freely. But behind the scenes, the trend is moving in the opposite direction. The country is rapidly pushing toward a fully digital economy, one where every single transaction is traceable, taxable, and monitorable. HMRC's cash crackdown fits perfectly into that vision. Because let's be honest, cash is one of the last forms of financial privacy we have left. When you use cash, it doesn't leave a data trail. There's no algorithm analyzing your spending. There's no company selling your transaction history. But in a digital-only world, every tap, every transfer, every purchase is recorded and stored forever. And that's exactly what some people fear this crackdown is really about. Not just about catching criminals, but about phasing out cash altogether. You can already see the signs. Try withdrawing a few £1,000s from your bank, and chances are the teller will ask you a list of questions. What's it for? Why do you need it in cash? Are you making a purchase? Are you sending it abroad? And if your answer doesn't sound satisfactory, they might even refuse the transaction. This is part of the new compliance rules introduced after 2023, when banks were required to implement tighter anti-money laundering checks. On paper, that makes sense. But in reality, these same rules are being used to profile normal people who simply use cash for legitimate reasons. And once that information is logged in the system, it can be automatically shared with HMRC's data matching tools, which are now more powerful than ever. In fact, HMRC's latest AI system, according to internal reports, can cross-check your income, your tax returns, your benefits, and your bank activity, all within seconds. It can see how much you earn, how much you withdraw, how much you spend, and even how often you use cash machines. And when something doesn't align, a red flag is raised. Now, it's easy to dismiss this as nothing to worry about if you've got nothing to hide. But that logic doesn't hold up when innocent people start getting caught in the net. There are already documented cases of retirees, small business owners, and even stay-at-home parents receiving inquiry letters because their cash movements didn't match their expected patterns. One retired couple in Manchester reportedly withdrew around $4,000 over several months to help their granddaughter pay tuition fees, money that came from their own savings, but they still received an HMRC inquiry letter asking to explain the source of those funds. Think about that. Your own savings, your own hard-earned money, withdrawn from your own account, and suddenly you're being asked to prove it's legitimate. That's the direction this system is heading in. Financial analysts are calling it the soft rollout of a cash surveillance economy, where you still technically can use cash, but the process becomes so complicated, so watched, that people naturally stop using it altogether. And that's what many believe is the long-term goal, to make cash inconvenient enough that people abandon it voluntarily. Once that happens, it's game over for cash privacy. Every financial move you make, from your morning coffee to your rent payment, will be tracked digitally. Now let's step back for a moment and understand why HMRC says this is necessary. The government estimates that the UK loses over $35 billion every year in what's called the tax gap, the difference between what should be collected and what actually is. A big part of that gap supposedly comes from hidden cash income that never gets declared. So from HMRC's perspective, monitoring cash transactions is a logical step to close that gap. But critics argue that instead of targeting large-scale fraud or corporate loopholes, HMRC is focusing on ordinary citizens because it's easier, it's automated. And when you can monitor millions of people's transactions at the click of a button, it becomes a numbers game. Catch a few, fine a few, and the system pays for itself. Meanwhile, banks are also tightening their internal reporting structures. Every cash transaction, every deposit, every withdrawal above certain thresholds is being recorded in greater detail. If you've recently made a cash withdrawal and noticed your online banking app showing additional verification messages or warnings, that's part of the system. And behind the scenes, this data doesn't just stay with your bank. It's sent to central reporting databases, accessible by HMRC, the Financial Conduct Authority, and the National Crime Agency. It's important to realize that all of this is being framed as a public protection measure. But ask yourself, who's protecting your privacy? Your right to use your own money without being tracked or profiled? Those are questions very few people in government seem willing to address. Let's not forget, just a few years ago during the pandemic, there was talk about the end of cash. Many people switched to contactless, and it seemed convenient at the time. But now we're seeing the long-term result of that shift, a financial system that rewards digital behavior and penalizes cash usage. And with HMRC's new crackdown, cash users are effectively being treated as potential risks. So what can you do about it? The first step is awareness. Don't assume your cash withdrawals go unnoticed. They don't. Every pound you withdraw leaves a timestamp, a record, and a digital trail. It's no longer off the grid. So keep your records clear. If you withdraw for specific purposes, like paying rent, sending money to family, or buying goods privately, make a note. Keep a small log, even if it's just for your peace of mind. Second, if you're self-employed, it's more important than ever to declare everything properly. HMRC's AI systems are now powerful enough to spot mismatches between lifestyle and declared income. So if you're earning cash from side jobs or small gigs, Be transparent. The fines for undeclared income can be brutal, and in some cases, even accidental underreporting can lead to investigations. Third, if you ever do receive a letter from HMRC questioning your withdrawals, don't ignore it. Seek advice immediately. Contact your accountant or a professional tax advisor and respond quickly. Most of the time, they're just trying to clarify information, but ignoring them can escalate things unnecessarily. Thank you so much for watching, for staying till the end, and for caring about what's happening with your hard-earned money. Please share this video with your friends and family, especially with anyone who still prefers using cash, because they deserve to know what's coming too. I'll see you all in the next one. Stay safe, stay smart, and keep your money protected.